let's talk about folks in their 30s. We call this affectionately the messy middle. This is a stage where that is the challenge that you are facing. You feel like you're being pulled in 1,000 different directions by 1,000 different things, and you just can't seem to keep it all together.
Well, yeah, think about it. You have your expenses are growing, yet your time is shrinking because of all the commitments. This is a period of time where good discipline, good financial management might just go out the window because you're like, man, all this life stuff is happening. I can get distracted very easily.
So in your 30s, what should your goals be? What should the things that you're focusing your attention on? This one may seem silly, but keeping it simple. We think about a lot of times in our 20s, we want to be more complicated. We want to be more complex. We want all of these things to enter into our life. And yet when we get in our 30s, we recognize, man, life has a way of getting complicated naturally. Again, we're being pulled in 1,000 different directions. Our dollars are supposed to pay for 1,000 different things. If you can consolidate and you can keep it simple and keep your main focus on the main thing, there's a really good chance that you're going to set yourself up for success relative to your peers.
Well, I also think part of simple is build a firm foundation. If you can make things automatic, meaning your savings habits, these things will set you up for your future if you can just make it simple, but also make it automatic so you don't even have to waste any more mental calories on this exercise whatsoever.
And for most people in their 20s, they're only focused on taking care of themselves. By the time you get to the 30s, there are probably other people that are now depending on you. It may be a significant other. It may be children. So you want to make sure that not only are you protecting yourself and your well-being, but you're also making sure you have appropriate protection for your loved ones in place. So as you think about your financial plan and what it should look like in your 30s, there are really two areas we think that you should focus on. The first being risk management, and then the second being, again, how you're saving and how you're investing your dollars.
Well, risk management, look, this is the unsexy part of financial planning, but it's so important because messy middles, you do have people counting on you. This is where you're going to look at, you think about, do you have life insurance? Do you have disability? Because in your 20s, it's so easy. Do you have a renter's policy?
Sure.
But now that we're in our 30s, let's make sure we're not leaving behind people who are counting on our income and counting on us to provide for them. Risk management's a bigger deal, Bo.
Brent, I think about, we have here at Abound Wealth, we have a couple of different health insurance options that we offer. One of them is just sort of like catastrophic coverage. Hey, I want to make sure that I have coverage in place that if like the worst of the worst thing happens, I'm protected. And that catastrophic coverage comes at the lowest cost. Well, it's not uncommon for someone in their 20s just starting out to say, hey, you know what? It's just me. I just have to worry about myself. I'm going to focus on that catastrophic plan because I want the premium to be as cheap as possible. Well, when you get to your 30s, that strategy that you had, that lowest cost, biggest risk exposure, might not make sense anymore. So you want to even reevaluate decisions that you've made in the past. Oh, I used to have the catastrophic health insurance. Man, maybe now I need the better plan. Or I used to only have collision insurance on my car, but maybe now I want to have comprehensive. You want to make sure you're thinking through these, again, just so you can make sure that you're not only protecting yourself and your loved ones, but also all the hard work you've done up to this point.
And then I mentioned earlier life insurance. I think a lot of people run away from life insurance because they're worried it's complicated, it's super expensive. We like term life insurance. I mean, where you basically choose how long you want to protect. And I would encourage you, like if you're thinking of how long it's going to take you to build up the assets to replace what you're counting on from your current income, that might be 20 years in the future. It might be 30 years in the future, but use that as the guidance. Or how long are your loved ones going to need this? There's nothing wrong with term insurance. Typically, it's pennies on the dollar compared to what's permanent insurance and other things. And that might be all you need at this stage. And then don't skip out on, Bo, emergency reserves. A lot of people don't realize, just from a risk management standpoint, emergency reserves are going to keep you from making those desperate decisions when life just happens.
Yeah, I think we get so excited early on in our career. We see how powerful our dollars can be, and we feel like if we have money sitting in a savings account, sitting on the sidelines, we're wasting opportunity. We may know that the wealth multiplier, $1 turning into $88 or $1 turning into $23 is so exciting. So why on earth would I leave money sitting in cash? Well, the reason you do it is you don't know what unknown is going to come your way. And so making sure that you have that fully formed, fully funded, and fully built out is going to protect you from those life circumstances that you might not know are coming. So that's how you protect your risks in your 30s. But now there's also another risk that you have in your 30s, and that comes to what you're doing with your dollars. We want to make sure that in your 20s, we give you this goal of saving 25%. That's what we want you to aspire to in your 20s. But in your 30s, it becomes much less of an aspirational goal and now becomes sort of a necessity. We want you to make sure that you are saving appropriately so that your future self can actually live the life that you want to live.
Yeah, a lot of people, I think, and I love that you highlighted the fact it's aspirational for the 20-something. We know that your time and your resources are limited. So if you can just do a little bit, it goes a long way. But I really encourage you, if you're in your 30s and you just now have discovered our content, don't sleep on the 25%. There's a reason when you go to moneyguy.com/resources, we have all kind of content that or resources that will show you the intersection point of the date you start saving and investing and the percentages and how it will go. And you will quickly see you've got to be doing the 25% so that you don't get behind. And I'm just happy for you because between the age of 30 to 40 years of age, the wealth multiplier at 30 is 23 times. For a 40-year-old, it's 7. So there's still lots of opportunity for growth. Just don't sleep on that savings rate.
Now, the next part of your plan, a lot of people are thinking, okay, guys, I get it. I'm going to save 25%, but what do I invest in? What should I go buy? We would argue that even at this stage, don't make it more complicated than it has to be, because most people in your 30s, your savings rate is still going to be way more important than your rate of return. So don't go try to figure out, okay, what stock should I buy or what strategy should I employ? There are fantastic resources out there like Target Retirement Index Funds where all you have to do is answer 2 things. How much can I save? And when do I think I need these dollars? And if you can answer those 2 questions, you can set it and forget it and be on your wealth building journey. So don't major in the minors. Focus on the things that actually have a big impact at this stage.
And for all the trolls out there, we're talking about index target retirement funds. If you talk about internal expenses, you're not talking about the index version. Go look at what Vanguard, Schwab, Fidelity, all these guys offer index versions of these funds, and they're dirt cheap. So don't sleep on that opportunity. And then here's the next thing that I worry about for my 30-somethings. I want you to aim to hit that $100,000 and other markets, because here's the other markers of success is because here's the risk. When you start saving and investing, more than likely in the first decade that you save and invest, you're going to hit your first bear market. You're going to hit volatility, and you're also going to you're going to see potentially that the amount of money you put in, the market value might temporarily go below even what you put in, and you're like, oh my God, this is for the birds. I'm not doing this anymore. And there's a lot of people that will quit in that first decade. Don't let that volatility rob you of the long-term compounding growth opportunity that there is. That's why we have so many resources on the money milestones for your 30s, but consistency is a big part of your success.
Yeah, you may be asking, okay, what are those milestones? What are the things I need to make sure that I do in my 30s? We actually have an entire episode that you can go out that says, hey, before you hit 40, make sure you are doing these things. If you want to know what those milestones are, if you want to know what those mile markers are, go check out that episode. And then the last thing, and I think this is so hard because it's so contrary to what we think as parents, but when you think about your financial plan in your 30s, you have to make sure that you put your oxygen mask on before you try to help someone else. So often we'll see someone who maybe has credit card debt, or maybe they're not saving 25%, or maybe they don't even have a fully funded emergency fund, but man, they started that 529. They're putting money in that custodial Roth. They're putting money in the kids' savings accounts. It does not benefit your kids for you to start building wealth for them before you have even established your own financial foundation. So make sure you're taking care of yourself first before you try to start helping your young children take care of their financial future.
Yeah, that's a big one, and I hope people don't sleep on that.